Hello everyone, my name is Alex. In this video presentation, I wanted to begin by talking to you about investing in stocks. So, why is it that you want to invest in stocks? Why would it be a good choice for you financially to invest in stocks? The thing is that stocks provide a great avenue for you, if you know what you're doing, to increase your wealth exponentially, definitely by multiple factors. And if you want to grow your wealth, there's very much an opportunity available for you if you know how to invest. If you have some money, you can take that money and you can invest in companies, and those companies will produce a return on your investment because they have staff and experts and already proven processes in place that are working and generating revenue. You're basically when you invest, you are essentially taking an ownership stake in a company by putting money into the company. So what they do is they provide a return to you on your investment for investing in their company, okay, for investing inside of companies that are already doing well. So the question you have to ask yourself is, why haven't you considered doing it? The only reason why you haven't is either a fear or lack of knowledge about how to do it. So in this video presentation here, I'm going to go ahead and provide a little bit more clarity as to how to get started in stocks, where you can start investing, and give you some tools and resources to really help you, so that way you can make informed decisions rather than making decisions that are based out of fear. The thing is that you can actually mitigate your losses in stocks by using things such as a stop loss. These are like basically tools and tricks of the trade. These are like the basics. It's like the same thing when you learn baseball. You learn the proper form and the right swing, or if you learn martial arts, you learn how to throw a punch properly. And one of the tricks is you actually throw your hip into the punch to get more momentum and force. These are such, a stop loss is that kind of a thing. It's a technique that you use to essentially mitigate your losses when you are investing. So, we're going to cover some of these in this video presentation. So sit back, hang tight, and enjoy the free information. Okay, everyone. So welcome back. So in this particular here, we're going to just take a look at Robinhood. So Robinhood is an investing platform that you can use. It has a very nice interface. You can use this to invest in stocks. You can use this for making money. All you have to do is know what you're doing. However much money that you have to invest, you can put in. See, here I only have $300 in this account. But that's enough to play with, to learn a little bit about what you're doing, not take too much risk that you're uncomfortable taking. But you get to learn that way. You get to learn how to, you look at the percent of what you're making. You can then use that as you gain experience and knowledge and comfortability with investing in stocks. You can then take some more money that you make and invest inside of stocks. So there's no need to go crazy off the bat. While you're learning, there's obviously a learning curve to doing this, but essentially it's as simple as buying and selling stock. That's what you do with stocks. So let me go ahead and show you Robinhood's interface. That way you can get a little bit familiar with it. And I'll also teach you a little bit about where to do research on stocks, so that way you can pick good stocks to invest in. Okay, so let's just start by taking a look at one of these stocks. This is the home interface after you've logged into your account. By the way, if you haven't created a Robinhood account, all you need to do is, I have a link that you can use to register for your Robinhood account. It's free. All you need to do is just, if you want to make an account so you can invest, use my link. I think I get a little bit of stock. There's a little perk for me if you do that. So that's nice of you to do that, and you're still getting exactly what you want out of Robinhood by doing that. So it doesn't hurt. Use my link. I'll put it in the description for you. So let's take a look at one of these stocks here. I'm going to look at. We'll go and look at this one. I wanted to pick this one as a good example. That way we can, understand the stock a little bit, and I'm going to give you a little bit of technical analysis to the stock, and I will also teach you a little bit, share some of my secret sources of this knowledge and information with you, so that way you can basically be better at investing in stocks. So let's take a look at this stock. This stock is called Moderna. Uh, each share here is worth $128.36 currently. That's just for one to buy one share of Moderna. So the value of the company is pretty high. $128 for a share of this company is obviously a lot, or respectable. That's a respectable dollar value for this company, and you have to ask yourself, well, what is it that they do, or what is it that they're doing that makes their stock value worth this much? So let's see here. Just this past week, this stock has risen 27.5% in value, and so it's gone up about $27.75 per share. Okay, so you ask yourself, okay, like, what the stock is obviously growing in value. Why is it growing in value? Well, let's take a look here. Let's see what this company does. So Moderna Incorporated engages in the development of transformative medicines based on messenger ribonucleic acid, mRNA. Its product pipeline includes the following modalities. I can't pronounce that. Prophylactic vaccines, cancer vaccines, intratumoral immuno-oncology. So they deal with cancer-related medicines, okay? Localized regenerative therapeutics, systemic secreted therapeutics, and systemic intracellular therapeutics. The company was founded by Noubar B. Afeyan, Robert S. Langer Jr., Derek J. Rose, and Kenneth R. Chen in 2010, and is headquartered in Cambridge, Massachusetts. Okay, so now we have a little bit more information on this company. We know that they deal with cancer, so that's obviously a big problem for people's health. And, well, we can see here that they have 830 employees. It was founded in 2010. Let's take a look at this. This is pretty important to understand. The market cap for this company is $50.27 billion. 50 billion, 0.27 billion is 270 million. So this 0.27 is significant considering the B over here. $270 million. It's not just, it's 50 billion, $270 million is the market cap. So this is obviously a huge the market cap. That means the set of all people who would find benefit, or the set of all companies that are customers or potential customers of this company. You add all of the total. Essentially, this is the total addressable market. Is what they're getting at. The total addressable market is the entire value of this company. It's $50 billion. I mean, 50 billion, $270 million. That's massive. So let's take a look down here, and you can see this is important news on the company here. Related lists. It's a 2018. So the company was founded in 2010, and just 8 years later, now it's an IPO. You can see the related lists that it is in. So it's 100 most popular, 2018 IPOs, healthcare services, pharma. Let's see what else we have here. So Moderna is currently, let's see, Sweden's Recipharm signs deal to package Moderna's COVID-19 vaccine. This is as of the 24th. This is 3 days ago news. So this is brand new news. So you know that this is up to date. What's going on with this company? Moderna Incorporated stock rises Wednesday, outperforms market. Do you see this? So this is news. You need to be informed. And the thing is that if you don't have the right information, if you don't, then you cannot make informed decisions. If you didn't even know about this, then you're like, oh, I've never even heard of this company. I'm too busy watching football, or whatever it is that you are too busy with to take a look at a stock or know about financial information. You're shooting yourself in the foot a bit. So it pays to learn about these things, because you can see just in the past week this company has gone up 27% And if you had known about it, if you'd been keeping an eye on it, then you would know, hey, look, if I had $1,000 and I put $1,000 into this stock, well, I would have made, let's see, let's get a calculator out. 1,000 times, you say 1.27, that means it's including the current value and you're adding on 27%. How much money would you have? Well, 1,270, right? So the same thing, let's say you had $10,000 and you were keeping an eye on this stock, you already knew about it, and you knew that this company is working on a COVID-19 vaccine, for example. Let's see. Right, 1.27, how much does that get for you? You made $2,700. See, now that's pretty significant, is it not? Before you made $270 on $1,000, and this is how you can make money. You can make money investing in stocks, if you know what you're doing. It's very simple. If you had the money and you bought a week ago, and you say you want to sell now, I mean, the value of your stock has increased by 27%, and appropriately the value of your investment would also increase 27%. If you had put $100,000 into the stock, how much would you have made? $100,000. Now this is if you're investing and you have a dedicated investing account. This is how you can make money by being an investor, you see. So 100,000 times 1.27. Look, you made $27,000 on your investment. If you had $100,000 and you were investing and you put $100,000 into the stock just a week ago, you were keeping an eye on your stock, you have a watch list of stocks, and I'll show you guys how to do this. I'll show you how to do the research. You can make your own list. You can do all of this in Robinhood. Okay, it's a very nice interface. If you have a laptop, you have, even on your iPhone, I don't know, where's my phone? On your iPhone, it looks great. Let me show this to you. 1 second, I'll be right back. 1 second, where's my phone? You see, I have the Robinhood app here. I have it grouped. I have a folder on my phone which I group. It's called Assets, okay? And I have some, you can see like some money signs on there, a dollar, a euro, a little cash bag, and it says Assets with some dollar signs on it. It's me being cute to myself. But yeah, these are essentially my banking and payment apps, and also investing for Robinhood. So here I'm hitting the Robinhood thing, and I have a little password. I'm going to put my password in, and you can see the app brings up Robinhood, and you can see everything here from your phone. It's a very nice, clean interface. You can see all the different stocks, and you can easily buy and sell. Let me show you. So here's a stock I have shares in here. You can see it's a really clean and great interface. You can see I can trade. I hit this button here. Boom. All it says is buy, sell, and you can hit the limit order. And I'll show this to you. Let's show you from the interface here. Okay. You come here. Let me go to one of my stocks. I come down where? So I go to portfolio. I can go to portfolio here, and this is different on your phone. You have to, when you look at your phone, the stocks that I currently have money in are here. They're at the top, listed at the top. Here in this interface, the stocks I currently have money in are listed here at the top. Let's take a look at this one. So you can see when you have money inside of the stock, you can see the market value of the stock. So this is the current amount of cash that I have inside of this company here, Acosti Pharma. Each share is worth 25 cents. Today it has gone down about 5.7%. Be not afraid. This is I believe in this stock, and I'll tell you why maybe later. But you can see here there's today's return on the stock and then the total return on the stock. So currently from the time that I bought, I'm only down 3.4%. Average cost of the stock, that means the average cost that I paid to purchase, average cost of the share, each share of the stock that I purchased shares at is 0.26, or a quarter and a penny, basically, for each share. And coming down, we can see more about Acosti Pharma, more about this company. It engages in the development and commercialization of pharmaceutical applications of its licensed rights for cardiovascular diseases. It focuses on the research of prescription drugs using omega-3 fatty acids derived from krill oil. Okay, the market cap for this company is $24 million. So, I mean, that's without a doubt sizable. And the stock is relatively inexpensive. Why did I choose to purchase stock? I did some research, actually, and this was a recommended buy. Potentially, this stock can 10x its value. Let me show you why. If you look at the history of the stock, just looking here, you can see we're currently right around here. And the thing is with stocks, and I'll share this with you. It's like you have to look at. There are two ways to analyze a stock: fundamentals, and then technicals. So its current market value is 25 cents a share, as you can see this right here, right? Its current market value is 25 cents a share. Past historical value of the stock shows that it is, well, let's see if we just cut it right in the center here. Past value, it's about $1.30, and it's even achieved heights of how do you say, about $2. So here's the thing: you're looking at the value of the stock. It's valued at about a quarter right now. If we hit the midpoint here, this looks like a valid midpoint. That's about $1.50. So what is the multiplicative factor difference between 0.25 and 1.5? That's about what is it, 6 or 7 times. You take a quarter, multiply it by 5, that's 125. That's about 6. Yeah, that's a multiplicative factor of 6. So that's 6 times, okay? Now, I want you to understand the power of this, the leverage that this has for you, the opportunity that there is for you. You see, like I showed you before, you have $1,000 and you multiply 1,000 times 6. What's 1,000 times 6? That's $6,000. So you just took your $1,000 investment. If you bet on this stock, and like I was saying to you, you can, and I'll show this to you, you can set a stop loss to make sure that you're mitigating your risk. You come here, you say, let's say you buy 10 shares of the stock. So what is 10 shares? So that comes out to, look, if you say, I want to buy 10 shares of the stock, how much is that going to cost you? $2.50. Okay, $2.50 you buy 10 shares of the stock, okay? Now that's not that much money. I mean, anyone can pretty much afford that. That's like that's less than a cup of coffee at Starbucks. If you want $20, that's a venti caramel frappuccino at Starbucks. Okay, so instead you buy this. Look, however much you choose to invest, you take however much money you want to invest. You understand that this stock, based on what it does, they do healthcare related work, producing prescription drugs using omega-3 fatty acids derived from krill oil. So I don't know if you've ever been to Costco, like the stuff that they have some krill oil. It's like fish oil. It's good for your heart. It's good for you. It's good for you. You take that. Let's say you invest $1,000 here. Well, if the value of the stock reaches it goes up, okay? If the value of the stock goes up, and it reaches a former value of, let's say, just $1.50, well, you just 6 times your money. So if you take $10,000 and you put it in here, well, now you have $60,000. If you have $50,000 and you invest and you 6 times your money, now you have $300,000. Listen, you sell, you put your money in, money goes in this way, boom, times 6. Now you have times 6 out this way. You sell your stock. You sell your stock. Now you have, let's say, $300,000. You take that $300,000, divide by 3. Now you have 100,000, 100,000, 100,000. You can now take this 100,000 and put that into and invest in other good companies that you have analyzed and assessed. Hey, this is a good buy. You also get other people's opinions. You get the opinions of analysts. So you don't necessarily need to. You should know. You should know a bit and have good judgment. Okay, that's very, very important for investing in stocks. Okay, you have to have good judgment. You have to know the metrics to analyze and assess these stocks, and based on the information, you make an informed, calculated risk. Okay, and here's how you mitigate your risk. Here's how you hedge your bets. You come in here, and let's say you buy some stock. So now you own some stake in this company. Okay, you have some shares. All right, and I've already set a limit order to sell most of my shares. I have about 1,100 shares in this stock. Okay, but I currently have 40 shares available to sell. Let me show you this. You come here, you click this button right in the top corner. It gives you a drop down. So these are the different order types that you can have in a stock. All right, you have a market order, which just means if you execute that order, it's basically going to submit that order straight to the market and immediately execute on the next day that the markets are open. So instead of doing this, we want to put I'll go over these in a second, but what you want to do here is you want to do a stop loss order, okay? And what a stop loss order essentially is just that it basically puts a threshold. So it says, hey, look, here's a line. If the stock goes below, the price of the stock goes below this line, then below this value, then I want you to sell this number of shares. I want you to sell all shares, or I want you to sell, X number of shares, and that would get me out of this because I want to limit my risk. I want to make sure I'm preserving my capital. You don't want to take your hard-earned money, and you don't want to lose your money. So it's very important to use stop losses. That's a very, 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 very important tool. And don't trade without a stop loss. That's like riding a bicycle without a helmet, or driving without a seatbelt on, or having fun without protection. Okay, definitely don't do it. It's it sounds a little bit exciting, but it's actually pretty dangerous. So just want to harp on it. Do use a stop loss, okay? So let's say we buy this at 25 cents a share, okay? Or you get in late and you buy maybe over here. You buy for $1. All right, whatever it is that you buy your stock for, lower, you'd subtract 8% from that, 8 to 10%. Okay, 10% tops. Definitely you want to sell after that. Okay, so 8%. What is 8%? Let's say the stock's value is $1. 8% below that would be 92 cents. Okay, so you want to set a stop loss at 92 cents. Right now, if you're buying the stock for 25 cents a share. So I need to take my calculator out and calculate that, or I'll just do it here on the computer so you can see. So you have 0.25, and if you want to get the 8% less than 0.25, you would say times 0.92, 92%. So that means you're subtracting 8% off of the value of this. So 8% below 25 cents is 23 cents. So then you come over here and you say, I want to set a stop loss at 23 cents. And I currently have 40 shares available to sell. And you see, so this is already a stop loss order. See, I've selected that. And it's good for the day. So you can either say, if it's good for the day, if your order doesn't execute, it'll expire at market close. If your order doesn't execute, it'll expire in 90 days. So you want to select good till canceled, because what this means is that, and it's good for 90 days. So that means if at any point in time in the next 90 days the stock falls below a 23 cents per share, then see this, now you hit execute, then it'll sell all those, it'll sell 40 shares of the stock. Okay, what does it say? It says you were placing a good till canceled stop loss order to sell 40 shares of ACST. When the price of ACST reaches 23 cents, your order will be converted to a market order and executed at the best available price. Okay, so you come here, you hit sell, and then it'll place that stop loss order. Okay, that's pretty much it with regards to stop losses. So I'm not actually going to do this. Let's just refresh the page, or we'll just click that. So I'm not going to actually do that because I don't want to do that. Yeah, but I did want to show you that, so that way you have an understanding of this. It's yeah, I'll probably go over some of these other orders with you as well while I have your attention. So if you want to buy some shares, currently I don't have any buying power. I'm already fully vested my account value. Here, here's another company. You can see this. What was I going to show you? Right, there was the other stock. I wanted to show you a technical analysis of this stock. Right, Moderna. So if you look at this, 5 years, okay. See how much it was worth then. It's pretty cheap. So this stock has IPO'd recently, and if you were aware of the stock and you knew what they were doing at this company, you'd probably be able to make an intelligent guess that the value of the stock would go up because it's in healthcare and they're dealing with cancer. And especially with the market cap of the company, the number of employees, you can see, hey, they are, they're making money doing this. And Robinhood doesn't show as much technical details with regards to the metrics of the company. I'd recommend using other services such as Investors Business Daily, Yahoo Finance, Seeking Alpha, to get a real good understanding and insight into the metrics that govern the company. But for the time being, I'm going to show you this. Let's take a look at some of the technical aspects of analyzing this stock here. So you're looking at, let's take a look at this pattern. Now this pattern very much looks like a cup and a handle. Okay, so what is a cup and a handle? In the stock investing world, a cup and a handle base is where you have a stock finding support and it looks kind of like a cup. So by cup, I mean if you draw a line, it's like, let me see if I can show you. I can't really draw on this, but follow, make a line the same way that I'm making a line with my arrow here. It's boom, boom. There's a cup. It's like a saucer. It's like a shape like this. If you see what I'm saying, okay. There's a shape here, cup, and you can kind of look at this as a bit of a handle, but this is more of the cup right here, okay. And then this is a small handle, and this is over the course of a year of time. So you can see that there's a long base here, and then a little handle right there, okay. And right around here is where the stock is broken out. Okay, broken out meaning it's broken through its resistance, and it is basically the price the stock is taking off, because you have a lot of investors and institutional investors who are putting money behind this stock. You see what I'm saying? They're putting money into this company to lift it off and to help grow it and develop it, because the products that it formulates and develops and delivers are valuable to a multitude of people. Okay, you can see that with the market cap here. It's a very large market cap for Moderna, so we got to respect it and respect what these people are doing. And you can see this just in the last 3 months, that the value of this stock has gone up 87%. Okay, and you see that's quite a lot of percent. I mean, depending on how much money that you have to play with, you could. It's basically just about doubling your money. Just in the last 3 months, you double your money. So if you knew how to do this, if you were paying attention, if you were informed, and all you have to do is click a couple buttons to do this. It's just a matter of, hey, you limit your loss with a stop loss. And if you have money in the bank, you can take your money. If you have money in your 401k, take that money. Instead of putting your money in your 401k, you can instead have your own investing account and use that account to grow your wealth. So 401k it's your 401k. It's not you're not necessarily managing that yourself. So I think better is to have an SEP IRA, a self-employed IRA. And if you're not self-employed, well then maybe you want to consider becoming self-employed, or you need to have some better business knowledge, and I'll share an opportunity for you to basically get that knowledge as well, probably more towards the end of this video. But it definitely does pay to know business quite well, and this is just one thing that you can do. Instead of playing video games all the time, you can also quote game the system as well by doing stuff like this. And I mean, it can be fun. I mean, like, who doesn't want to double their money if they know how? So take a look at this. 87%. 87%. I mean, if you don't think that that's kind of cool, I mean, I don't know what exactly you think is cool, but I think that's pretty cool, like in the scope of things that are neat. I definitely think that is neat. So I mean, what would that do for you? Like, I mean, let's just take some numbers for a second. Let's say you invested 3 months ago into this stock. You weren't sure. Oh, you weren't sure if this is going to go up, but like, you have money in the bank. Listen, if your money is in the bank and it's not invested into something, it's not going to go anywhere. It's not going to go up. It's not going to go down. So this is why it pays to invest. So let's say you were smart and you were saying, hey, you'd already done some research. You'd compiled a list of stocks that you had taken a look at, and you're like, hey, this one has promise. It's at a good price point right now. There's room for this company to grow. I've taken a look at the news on this company, what they're developing, what they're up to. I've assessed the demand for their products based on previous sales revenue and whether or not their sales are going up. That's a key metric in analyzing the fundamentals of a company. You take a look at what they do. You take a look at their earnings and their sales. Okay, I'm giving you foundational knowledge here. Okay, these are the fundamentals of assessing a company for its value. Okay, you take a look at sales and you take a look at earnings. And you want to see, based on the previous year, every quarter they publish their earnings and sales information. Okay, it's public information. Okay, they publish their earnings and their sales numbers. Okay, and you can see whether or not those earnings and sales numbers are going up or not. Okay, and if they're going up, then hey, this company is growing. Okay, there's an obvious demand for what they're doing based on sales. Okay, based on the fact that they are selling their product and or services. Okay, and if that number is going up, you can see that the quantity of what they are selling is going up. So now and you can see their earnings. Are they making money? Are they profitable? You can see all this information. It's public information. Okay, so and you can find this information, like I said, on Yahoo Finance, Investors Business Daily, and I'll show this to you. Investors.com. I think it's finance, right? Finance.yahoo.com. Let's take a look at Amazon because everyone knows Amazon. So here's Yahoo Finance. Let's take a look at Amazon. And Amazon stock is currently about $3,200, $3,195, and fair value. It's overvalued currently. That's what they think. Okay, so you can see earnings per share is $34. It's obviously very high. The market cap for Amazon is $1.6 trillion. Let's see, financials is what I want to look at. Financials and analysis. So you can see here, if you take a look at Yahoo Finance, what kind of data do you get? So you can see their income statement. That's their accounting statement, right? You can see their income statement. And you can see total revenue, gross profit, their operating income. And this is for the year, right? This is for the year. Amazon makes more money than this in a year. I know that for sure. Gross profit division. I think this is in millions of dollars. No, it can't be that much. Total revenue is good. This is annual. Let's see quarterly. Okay, it goes up by the quarter. So you can see if it's, money is increasing. You can see if the company is growing or not. Let's see analysis. Earnings. Average estimates a year ago. Earnings per share estimate, actual difference, earnings per share trend. So this is earnings per share trend. This is good. You can see if this is okay, so this is increasing time. So earnings per share estimate, $7 earnings per share if you own just one share. $9 earnings per share, $34. This is an estimate of how much you would earn just from one share of owning this. I mean, the price of Amazon is, as I said, it's overvalued. I wouldn't want to buy stock in Amazon now. Maybe 5 years ago, maybe 7 years ago, maybe, probably definitely 10, 20 years ago. But at $3,000 a share, like you should have probably already gotten in and now just gotten out. There are other companies to buy stock in, I would say. So here are the recommendations based on where, whether or not you should buy this or not. And okay, well, maybe I'm wrong. The recommendation here is that it's a good buy. So yeah, people are actually recommending that you buy it. So I see what they're saying. So wow, analyst price targets. You can actually get. You can get a lot of data, and this is completely free. I didn't pay for this. Analyst prices currently it's the $3,195. You can see that the analysts are predicting that the price of the stock will raise to $3,800. So that's yeah. So there's money to be made in that. Of course, If you have money to set aside, let's say you believe in Amazon stock, which you probably should because it's one of the biggest companies in the world. Um, let's say you had $250,000 to invest. And what is this? What is the price difference between 3,812 minus 3195 divided by 3195? The percent difference, that's about a 19% increase. So that's just about a 20% increase, 19%. So let's say you had $250,000 you wanted to invest, and you felt comfortable putting that into Amazon. Times 250,000 times 1.19. Now, instead of 250,000, you have almost about $300,000. Okay, so it's about a $50,000 increase. I mean, how is that not a good thing for you and your family? You made $50,000 doing that. If this comes true, if this prediction does indeed occur, so. Now you can do the same kind of research, and you can add Amazon to a watch list. You just need to sign in. Your Yahoo Finance account or your Yahoo account. Right. We're not gonna go through that right now. But you can see here that But let's see how. Let's see. I want to say which stocks are a good buy for. Let's just say which stocks are a good buy. Now you're going to see a lot of. Let's take a look. This is Money U.S. News. Just taking some time here. Let's go actually here, investors.com. That's good. Money U.S. News. For whatever reason, it's not there. Their website is being difficult. So let's see this. Best stocks to buy right now. Buying a stock is easy, but buying the right stock without a time-tested strategy is incredibly hard. So a time-tested strategy, as if you want a time-tested strategy, I'm going to show you two books that we can get, and I'll link to the description in both of these books. How to Make Money in Stocks by William J. O'Neill, and The Intelligent Investor by, I think his name is it Benjamin Graham? That's right. So, and this is a book that Warren Buffett, okay, the billionaire investor Warren Buffett, he learned from. By far the best book on investing ever written. And I mean, the book is available on Kindle for $10.50 and paperback for $14. So I'll go ahead and link in the description. You can get the book. Again, Warren Buffett says that this book is by far the best book on investing ever written. Okay, and we all know how much Warren Buffett is worth. He is a billionaire. So I think $10 is worth your money, and you should use my link to get the book. There's another great book, which I would also highly recommend. How to Make Money in Stocks by William J. O'Neill. He goes over the a strategy. It's called Can Slim. Can Slim is the strategy for investing in stocks. Now, I don't remember each and every component of Can Slim. I do know that it's an acronym, okay, and the letters essentially stand for, um, let's see, I think C is current, as in, mm, I'm not sure, I don't remember, but in generally speaking, you want to, I think the C stands for, it is the current market um, conditions. I think that's actually what it is. And by current market conditions, we're talking about whether or not the stock market as a whole is in an uptrend or if it's in a downtrend. And you would know that based on, if you bought a subscription to Investors Business Daily, you would be able to keep track of whether or not the market is in a current uptrend or if it's in a current downtrend. And what that means is essentially that uh, the market is either, people are either generally speaking selling their stocks, so that means that you would find a downtrend in price because there's more stock available, and when there is more of a quantity of a valued commodity available, the inevitable price of that commodity, whether it's a stock or really any sort of commodity, it's going to go down because there's simply more available. Okay. Rather than if it's an uptrend, that means that people are really buying stocks. So because there's such great demand for the stocks, there's going to be less of the stock available for you to buy, and you have to. And then the price of markets in general are going to be going up. Okay, but there are other acronyms to the CAN-SLIM method. I think A would be I think it's annual sales. Is annual sales. N is for new, as in either new news, okay, for new news or new leadership. S, I think, is actually for sales. The L would be for, I don't really remember what the L is for. I think the M might actually be market conditions, but like I say, you got to look this up. L and I don't really remember. I don't remember all of it, but I do know that you get a lot out of reading the book. So I'll link to the book in the description. Okay. Anyway, so that's how you can learn about investing in stocks, more than we can cover in just a brief free 30-minute video. Buying a stock is easy, but let's see, the 5 best stocks to buy right now. Buying a stock is easy, but buying the right stock without a time-tested strategy is incredibly hard. If you want to get those good strategies, definitely do check out The Intelligent Investor, as well as How to Make Money in Stocks, okay? Check those out. So let's see. Since the coronavirus bear market meaning we're in a downtrend, okay, stocks have been rebounding powerfully. So the strong action reflects a rising confidence that the economy will eventually recover from the coronavirus. Okay, the broader stock market got a shot in the arm after Pfizer and BioNTech, then rival Moderna. See, Moderna. We actually just went over the stock, which is awesome that it's in the news. Announced positive coronavirus vaccine test results. That's obviously huge, and you can see this, that the value of Moderna has just gone up because of that. And you can see Moderna is already in one of my lists. Now, it came after a rally fueled by Joe Biden winning the U.S. presidential election, though President Donald Trump is still disputing the result. Soaring coronavirus cases and the new COVID restrictions are concerns. The dwelling coronavirus headlines have also have spurred some back and forth between stay-at-home stocks and equities that might fare better with the economy returning to normal. With stocks moving powerfully and the market back into an uptrend, it is a time to be looking for stocks near buy zones showing strength compared to the rest of the market. You see? So, and we can see this, right? Best stocks to buy, the crucial ingredients. Remember, there are thousands of stocks trading on the NYSE and NASDAQ indices. But if you want to find the very best stocks right now to generate massive gains, The CanSlim method offers clear guidelines on what you should be looking for. Invest in stocks with recent quarterly and annual earnings growth of at least 25%. Okay, quarterly and annual earnings growth of at least 25%. Look for companies that have new, game-changing products and services. Also, consider not yet profitable companies, often recent IPOs, that are generating tremendous revenue growth. Okay? IBD's CanSlim investing system has a proven track record of significantly outperforming the S&P 500. Outdoing this industry benchmark is key to generating exceptional returns over the long term. In addition, keeping an eye on supply and demand for the stock itself, focusing on leading stocks in top industry groups, and aim for stocks with strong institutional support. Once you've found a stock that fits the criteria, it is then time to turn to stock charts to plot a good entry point. You should wait for a stock to form a base and then buy once it reaches a buy point, ideally in heavy volume. In many cases, a stock reaches a proper buy point when it breaks above the original high on the left side of the base. More information on what a base is and how charts can be used to win big on the stock market can be found here. Okay, so there's a lot of information here, and I'll go ahead and link to this article here for you. But there's actually a lot of there's a lot of information on investors.com that shows you how to invest in stocks. They actually teach you, and they will give you a lot more training. So let's see. C stands for the CanSlim, as I mentioned. C stands for current quarterly earnings, annual earnings growth, new product service management or price high. Okay. S stands for supply and demand. Okay. L stands for leader or laggard. I stands for institutional support. M stands for market direction. This is all very, very solid. And yeah, you know, I should, I wonder if they have like some sort of program where I can recommend you guys some products from them. Products or services. So look, there's tons of information out there, you know, for whoever is looking to learn more about this kind of stuff. And I'll link to some good starting points for you, so that way you can check it out and, you know, learn a little bit for yourself. But yeah, I think that's probably a good stopping point here. You know, I don't want to keep you guys held on for too long. We've covered some good stuff. You know, we've talked about bases, we've talked about some stocks, looking at stocks, why you should invest in stocks, how you can really multiply your money by doing that, and you know, set yourself up for a good financial future, and generally speaking, having a lot more freedom and options in your life. You know, you can do all this from your phone or from your computer, no sweat, and make good money doing this. You know, you can make good money doing this. So I think that's about it. I'm going to share a link to you with you for Robinhood in the description of this video. I'm also sharing the links to these articles here, as well as the books that I mentioned. So check those out, grab a copy for yourself, get an account with Robinhood, and start trading. You know, learn, you know, execute the stop loss orders on all of your purchases. Okay, after you purchase some stock in a company, you compile a list. You find good companies that you want to invest in, and like I say, you can do research just by searching on Google, as well as if you do get a subscription to Investors Business Daily, you can see a lot of they actually compile lists of stocks for you. Okay, so CanSlim Select, IBD 50 is one, New Highs is another, stocks near buy zone, stocks on the move. Okay, and as well, with your free Robinhood account, you can also see 100 most popular or top movers Top movers is a great list that you can see. You can see companies in technology, and you can see how well they're doing. You can see if you come here, top movers, they show you. So here's a company, for example, Quantum Space Corporation. It's gone up 64%, and I mean, you don't want to get greedy with this stuff, but it's okay if you are a bit greedy. It's fine. As just you need to be intelligently greedy. Set those stop losses. So like if you had $10,000 and you invested in this company, 64%, man, 64%. You'd have made $6,400. I mean, how is that? That's not an insignificant sum of cash. Or you put $100,000 into this thing. It's got a market cap. Let's look at this company, Quantum Space Corporation. What are these guys doing? Operates as a blank check company if formed for the purpose of effecting a merger, capital, stock exchange, asset acquisition, stock purchase, reorganization, or similar business combination with one or more businesses. The company was founded April of 2020, so this past year, and is headquartered in Westbury, New York. You see, so they're acquiring assets. I mean, the same thing that any person would want to do. You want to acquire assets, things that make you money. I mean, these are assets. You take your money and you put your money into companies, into businesses that are they are making money. So and when you buy a stock, as I said earlier, you are taking a ownership stake in this company. So they're taking these people who work at these companies, they're taking the money that you invest in this company. You're investing in this company from the comfort of your home. They're taking the money that you're investing in them and they're using it to fund their research and development. They're using it to fund their payroll. They're using it to fund their product acquisition. They're using it to fund their product development and also their distribution. So they're using it to run their company and run their operations. And when you invest in them, you give, you get back. You see, and it's really about finding the right companies to invest in, such that you're making a good choice. You're putting good faith in other people and the work that they do, and you make money doing that. They look at this company. In a day, it's gone up 57%. I mean, that's huge. So let's see, well. This company has just come out. Look, in November, it's been trading at $32 a share for what? And why is it flat like that? That's confusing to me. Look, just a month ago, it's November the 27th. Just a month ago, this stock was at $11.59. I mean, if you bought the stock, right here you can see this is a great example of a cup and handle base right here. Here's the cup handle, small handle. This right here, that's the handle. This is your buy point right here, right there. $20 is your buy point. Now the stock is at $38, almost up times two, just about times two. So you take your $10,000, you put this, and now you have $20,000. Or you have, I don't know, $50,000. You take that, and now you have almost $100,000. $100,000, you have $200,000. It depends how much money you have to work with. Okay, but if you do this and you make a number of good choices, you see. I wonder if you can see this and see the volume on it if you expand the charts. So let's take a look at this. 3 months. It's a 1 month. There it is. See, I think my thing is in the way here. You see this? This is the volume down here, so you can see the price action as well as the volume. I mean, this thing is just blown up in the last week or so. Just blown up. So you take your money, you buy it at the appropriate point. Here's the cup handle. Right here, it's shot up. So I mean, you're not seeing a significant amount of volume compared to normal, I think. Let's see. The volume here has been 4 million. 4.25 million, 3 million. What's the average daily volume on this? I mean, it's shot up. You can see the price shooting up. But what's the average daily volume? Average volume is 3.5, so at 4.25, that's above average volume, obviously. Yeah, the stock has blown up here, and it's only if you knew about it that you would have that. So let's add this to the list. These are top movers, so you can see how you can do some initial research. What really matters is that you know about these stocks and the good ones before they actually break out. So that's the important thing. But you can see here, if I come in here to technology, which I found that once again by here are several different lists. I come up here. This is just the basic interface for Robinhood. This is the home page. The popular lists, okay, popular lists of stocks. So, I clicked on top movers and I clicked on technology, okay? So, top movers, you got 20 items here. It'll show you the name of the company, symbol of the company, price of the company, how much it's gone up today, market cap of the company, and you can also sort this. So you can sort it. Quantum Space Corporation is at the top of the top movers, okay? And you can see how much they are going up, each of these stocks. Like I say, Investors Business Daily is also showing these top tech stocks break out to new highs, which are still in buy range. So that's great, great, great. Which are still in buy range. Tesla is in the buy range, so this is good. Tesla has just been named the second most valuable company in the world. I think in the world. And just right behind Amazon. Yeah. So you can see what else is going on here. Tech stocks, IBD 50 growth stocks. So we've got growth stocks. If you want to look at, you want to compile your list of stocks here. Can Slim select. All right. So take a look. These are the 5 best stocks to buy and watch now. We're taking a look at FedEx, Target, AMD, Apple, supplier Corvo, and Novacure. Prime candidates. Prime candidates. See, these are things that you want to look at these stocks and you want to see what's going on with them, and decide or not whether or not you want to invest in them. You could be seeing a return of investment of 37% in the next 3 months. You take that money and then you sell and then you go buy the next stock. You should have your list though. You need to compile your list, and then when you take your $10,000 and you make 37%, now you have $13,700. And you take that, you reinvest. Maybe now you make $16,000. You take that money, reinvest. If you get a double, you get lucky, you get a double, and then you have what, $32,000. You take that money, reinvest. Keep doing this, and you keep doing this, and you're accruing money into your account. Don't spend your money. This is the money that you use to make money, and the bigger that account grows, the more leverage you have, the more capability you have to really grow your assets. Okay, to grow your money. But that's pretty much it. That's really all I wanted to share with you guys, and I think that this is good information to know and understand, and that pretty much anyone can do this. Pretty much anyone can do this. All you need to do is have do the research, okay, and then make good choices. All right, and then you need to know when to buy and then when to sell. Okay, so don't get greedy. When the price of the stock goes up, 37%, 50%. If it goes up, you gotta know when to sell. Okay, if it does break out and it just goes nuts and it goes up, 80%, 120%, 200%. The stock can go up, it goes down. What goes up must come down. There's a rhythm to this stuff. And maybe what you can do is you can buy it as it goes up, and then people are going to start selling it a bit. So that's why the stock goes down, and then you can sell it here, let it dip, and then buy it again. Okay, let it form another base, and then make money on the up, sell if it comes back down, then buy it again, goes back up. You see what I'm saying? So you need to buy it low. You need to buy a stock low and then sell it high. The thing is that you want to keep the reason why stocks go up and down is due to emotion. People's desire to capitalize on their gains, their lack of faith in the company. They see a better opportunity somewhere else. There are all sorts of reasons why people would sell their stock. Maybe they want to just sell the money, take their profits, and go on vacation or make a significant purchase or whatever. But there are also institutional investors. This is what they do. This is how they grow their company. You know what I'm saying? So you need to, there's a number of different things to know and understand. And really, we've only just touched the surface about it. Okay, we've just touched the surface. But I gave you a pretty brief introduction, a good foundation, and also have pointed you in the direction of other resources that you can use to learn more about investing in stocks. So I hope you guys enjoyed the presentation. That's about it for me on this. Give me a like, a comment. Comment on this. I hope that this made a difference for you. Like, comment, and subscribe to the channel. I think we're going to create a great community here of like-minded people who are interested in their financial future and knowing really what kind of opportunities are available for you. Just as a normal person, you could take your money and you can really do something with it if you start knowing what you're doing. Okay, you get a good $5,000, $10,000, $15,000. That money. Use that money. You need to have an investing account. You take that money, you can really grow it. Okay, you can really do a lot with it. And why is that good? Because obviously your financial well-being is tied to your personal well-being and your lifestyle. So that's important. And I think that we as people can all agree on the fact that we want to be doing well for ourselves. So I hope this did improve you, improve your understanding of stocks and the markets a little bit. I'm just a passionate and interested and enthusiastic investor. And, I just thought I'd bring this together for you guys. So, hey, you guys like this, like, comment, subscribe to the channel. I'll be coming out with some more content just for you, giving you my thoughts on good, solid buys for the stock market. And also presenting you with other relevant information that'll be good for your financial future. Okay, so thanks so much for listening. By the way, if you guys haven't already, if you haven't heard about this, I'm currently promoting a excellent educational course on business. It's called Online Business Mastery. Okay, if you have ever wanted to get into business or you want to learn a little bit more about what's going out there in terms of e-commerce, in the digital advertising space, there's a lot for you to really understand. If you want to start your own business, there are options for you. Okay, if you haven't learned anything about business yet and you want to learn more about business, you want to grow your personal skill set, you want to learn more, do check that out. Online Business Mastery has been designed to be a replacement for an MBA. So if you want a solid education in business, you want to understand sales, marketing, finance, leadership, product development, the provision of services, all this kind of stuff, you want to learn this stuff, and that way you can start your own business or start an e-commerce business. There's a lot that's covered inside of Online Business Mastery that's going to be very beneficial and useful for you. So go ahead, check it out. It doesn't really hurt. There's a money back guarantee on the course, and it's been priced for the price of a college course. So I mean, if you want to continue your education, you want to learn some other things, you want to get yourself involved in a community of like-minded people, go ahead, check it out. Promotional offer is in the link of the it's in a link in the description of this video. So do check that out. And thanks so much for watching and tuning into the channel here. Okay, thanks guys. Catch you guys later. Take it easy.